Today, I'm going to explain to you in brief what an Elliott wave is. There's going to be many complicated explanations as to what it is when other websites try to explain, or they try to give you information in a book, or try to give you a bunch of technical mumbo jumbo. Elliott waves are simply from start to finish, they are positions on a chart that help you understand where a trend is going, right? Elliott waves can go anywhere from 3, 5, 7, and 9 retracement points. It can go as deep as 11, but at that point it is going to happen less frequently, or it's going to be a lot less predictable. The most standard ones that you see are typically 3-point retracements, 5-point retracements, and 7-point, right? Those are typically the ones that are the safest trades to take within those zones. So enough talk, let me show you exactly what that is. So I'll use the path tool, okay? And first thing that we got to do is identify either the highest point or the lowest point on our chart on the left side. So currently it's going to be right here. All right, the first lowest point that it hits is there, and then it goes and makes a new high. We just got to make sure it is not lower than the other one. So right there, and it's a lower high, as you can see, so we're trending down. All right, now the next wave, what you want to make sure is it goes lower than we have the previous one right here. So this one would not be it. This one would. The only situation is that this doesn't make a new high, therefore it'd be erased by a lower low. All right, so this would be our next point. And then as you see here, when it starts going up, but then it has a path that goes up higher, then that would be the next point. And then finally, this is where we would end. Okay, so quite simply, when we would label them all, let me see if we have the numeric. No, that's fine. So we'll just put text, okay? So text, this is 1. Or sorry, that's a 0. 1 is right here, okay? 0, 1. Better draw it out, actually. 2, 3, 4, and 5. Okay, so those are Elliott waves, and I'll just delete the text box and we'll keep it all with that marking tool. All right, your point of origin is 0. That is our highest point, and we want to find trades going down. All right, so what this simply means is within the first leg, which would be going down to the 1, right? That is the lowest point that it hits within this entire first move before it starts going up, right? The peak that it goes up, what you need to understand, if it goes above point of origin, then this becomes the new point of origin. But since it peaked here and started going back down, this is number 2. Same idea as if this actually ends higher and then goes up a little bit more, right? That we would have to have a new lower area which would go. So again, point of origin, the first lowest point, the first highest point would be number 2, the second lowest point would be number 3, the second highest point is number 4, and then third lowest point is number 5. Okay, so for example, why is it this way? Why can't it be simply if we go from here to here and then go up and then back down and then like this and like this? Well, the reason is, let me draw that one more time, sorry. The reason why this doesn't work, okay, and it doesn't constitute an Elliott wave is because what ends up happening is once it starts going up and then back down, it makes a newer high from its previous one. So because it makes a newer high when it's trending down, it erases this point here, okay? And what it ends up happening is on a smaller move, this would be the true path, right? So if we hit our low, which as you see, it's going to be right there, and then we hit our high, and then we go back down. So within that first leg, as you see, it's actually two smaller moves, right? One going up here, and then the second one coming back down from its initial drop, okay? And I'll just make this one a different color so it's a little bit more clear. So we'll get that white. So now it's starting to go up, right? So within the second wave right here, we have a mini one, right? So we'll go there, and then here, and then here, here, here. All right. Oh, let's double click on that there. Come on, stop climbing. There we go. Okay. So as you see now, this one, it makes a higher, goes high, then it makes a higher low, higher high, higher low, higher high, right? And it peaks right there because then it starts going the other direction. So Elliott waves, typically you want to find on the larger time frame, and then within the largest moves, you're going to find the smaller moves as it keeps continuing, okay? So now from second point, right here, you know, we find the first low, and then the next high, and then the next low, which would be right here. And then as you see right here, right, on the dotted line, this high seems to be pretty valid, except when we get to here, this is a higher mark. So this one would be invalidated because now we have a higher high going a little bit later on. Right? So anytime that you have either a higher high or a lower low after the previous point, that previous point is no longer valid, and then the most current higher high or lower low becomes the next point of contact, right? So then it'll be right there and then back down to there. Okay, so as you see, we have 1, 2, 3, 4, 5 moves within 2 to 3. We have 1, 2, 3, 4, 5 moves between 1 and 2. We have 1, 2, 3 moves between 0 and 1. Okay, so now between 3 and 4, it looks like right now there's only about 3 moves, right? But let's take a look. So this would be the first 1. But here's the thing, right? So do we make a higher high on the next one? Yes, we do. So we can technically count this as 1. But can we count this as 2? No, because this drops lower. So it would erase these first 2. And that would be the first point, that would be the second one, and then that would be the third. Okay, so there's 3 moves in between point 3 and 4. And finally on the drop, we have, as we go down, let's see, we can even count this as a little move, right? Just one short pullback there, here, to another one, because every single time we make this move, it goes lower, right? So until we get to here, right? Because then we have a higher high compared to this one, so this one will be invalidated. So we draw it there, then there. Can we take it there? Absolutely. Can we take it there? Absolutely, because it doesn't erase our next high. That one is a lower high. And then, boom, down to there. So that looks like a very long move, a lot of tiny little waves inside between 4 and 5. Well, let's see how many there is. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, right? It's a lot of little moves, but as you see, like every small candle change, it's still going down and trending. The issue is that it's not erasing the previous low or previous high because it's continuing on that path down. Right? As you see here, if I would have drawn it here, then here, and then it goes higher than the previous one, right? It would be fine, but the trouble is this goes deeper than the previous low. So that would erase the previous 2 moves. All right? So this is how you map out Elliott waves on a chart. Okay? And when you understand that if you had your 5 moves already, okay, we're going to be looking for move number 6. So let's take into account what you see right now between 0 and 1 to 2. Okay, so the best way to kind of identify the trends in Elliott waves would be with the Fibonacci. Okay, and I'll explain that in the next video. But as you see right now, when we go from peak of the 0 to the bottom of the 1 here, we're just going to stretch it across. Okay, we have a strong pullback coming between the 618 and the 786 before it drops lower. Okay, and once you learn within Fibonacci, that's kind of the golden area, is between these bars. Okay, this is kind of the golden area for reversals when it comes to trend trading or Elliott waves, right? So you saw it goes 2, which was the pullback. It did not breach the point of origin, okay, and it reversed around the 618. That's as high as the candle actually closed, right? The wick was higher because so that would count as the highest point. These candles closed higher, but the wick never crossed the previous wick, right? So this would be our highest point at that time. So that's where we have it. I'm like, okay, great. So we have our golden zone drawn up right there. So now, how are we able to find out number 4, right? Because now we did from 0 to 1, so we draw from 2 to 3, right? Because now we can clearly see that all the trend is going down. So we draw 2, down to 3, and we drag it across. All right, and look, again, almost the exact same area, right? So now we take this box and we kind of highlight, showing that this is exactly what we were expecting. Okay, once it hit that area, it started going deeper. All right, so now as it went deeper, it goes to 5. So where are we expecting number 6 in order to take the trade from 6 to 7, right? Because we want to be able to stay within trend. So what you do at that point is you take your Fibonacci, you draw it from 4, the peak of 4 right here, all the way down to the peak of 5, right? The valley, I should say, right there. Okay, and judging by history, we already had 2 previous moves. What are the chances the third move comes very close to that same spot, right? So we're going to be looking to be able to take a trade around this area to take it down, right? And not to say that it's going to be exactly as it happens. It's just we're going based off patterns, right? So we already saw 1, 2 times that is exact same pattern played out between 1 and 2 and 3 and 4, right? The bounce up happened. So there's one of 2 things that you can do. It's possible to take a trade going from here into that zone, but because that's a counter trend trade, it's not guaranteed that it's even going to come this high. There is a possibility that if this is a very strong trend, it's only going to come up to here, if that, and then continue on downwards, right? So you want to make sure it pulls back as deep as possible into your entry zone before taking that trade on the way down. So again, we saw the outlines of the Fibonacci. We see how this is playing out. Okay, and then we see the possibility of the waves hitting this area before coming down to a potential 7, right? So up here would be our potential 6, and down here would be our potential 7. And that would kind of conclude Elliott waves and what to look for. All right, if you're taking trades on the uptrend, then it's exactly the same. The difference is your point of origin will be down here, and then the numbers will be kind of inversely flipped, right? So the odds would be on the top and the evens would be on the bottom. The way to take trades on Elliott waves, you always want to take trades going from the even number to the odd number as a beginner. The more experience that you have, you can fiddle around however you like. This is just what I would recommend doing when you're first starting out. Okay, so it may look a little bit messy, but I hope it made sense as I was drawing it up. Okay, please stay tuned for the next lesson, which will be Fibonacci, and I'll go into detail explaining that. Take care.